Hi, this is David Skarica, editor of DixonToProfits.net, and I'm here at the Hoover Dam. This is a series of videos that we're doing out here while I'm here at speaking of Freedom Fest at a conference. And one thing people always ask me is, Dave, how do you pick stocks? How do you do investments, etc.? Now, I'm lucky enough that in the junior mining industry, the wind's almost blowing that away there, but in the junior mining industry, I know a lot of contacts, and I'm able to get access to deals, and I know the good people. I know people who set up really high quality companies. So that's a little different. That's not my using my technicals and fundamental analysis. That I'm doing based on good, honest people who put together quality projects. But in the major markets, I use a multi-tier approach. One approach I do is I look at the macro trend. I think that's mostly important because there's an old adage that even a pig will fly in a bull market. So even bad stocks fly in good sectors. But what I want to do is I want to find the sectors which I think will lead. And right now, by the way, just so you know, I think that are commodities and emerging markets. Then I trickle down. I want to find quality companies with quality management that are cheap, hopefully undervalued, trading at discounts to their historical valuations. And then I look at technically, are they basing, are they showing signs of bottoming, etc. And that's basically what I do, and then I pick out my companies from that. So I'm using a combination of fundamentals and technicals and the macro kind of picture. And my three favorite analysts, and I would have to say, are probably John Templeton, who was a value investor. Templeton was a brilliant guy, actually during the Depression, because we're out here where they had a Make Works project during the Depression. Is what Templeton did is he bought 100 stocks under $1 in the late 30s. And he basically said because of the war, goods would start moving again. And 36 of these stocks were actually in bankruptcy. And 5 years later, these 100 stocks went up 4 times in value. Like George Soros is always thinking 2 or 3 steps ahead. He'll see a macro event, and then he'll think how to profit from that event. And then I also really like Jordan Rogers, Mark Rogers and Mark Faber, who are contrarians. And Faber, same thing. He kind of predicted the macro meltdown in the markets and looks a lot of monetary policy and fiscal policy and how those can affect. So that's kind of, I use a combination of all that in the newsletter. So we just want to remind you again that if you're watching this video, you're a member of Free List. And as a member of the Free List, you get a 50% off deal to our newsletter. So you just click at the bottom of the email that you received, linking you to this video, and you can get the newsletter for $350 a year, which is half price, which I think is a very, very good deal. And we hope you come aboard, and we hope that we can all make some money off these coming trends in the market. Thank you very much.